you mentioned hardship. Can you please tell a little bit more about the mortgage holidays and how the banks are coming to play in helping people who are in need at the moment?
Yeah, great question.
Struggling with repaying their mortgages?
Yeah. So as you can imagine, there's a lot of people out there who are experiencing some loss of income. More commonly, just decreased hours, or put in a position where not as much money is coming in as was previously prior to lockdown.
Yeah.
So the banks have kind of made it a lot more accessible. These processes, which used to be quite tedious to get through for mortgage holidays, interest only requests, that sort of thing, they've made it a lot more streamlined and a lot more accessible for those clients who are struggling. I think something like 68,000, I read yesterday, 68,000 mortgage holders in New Zealand have requested for some relief.
68
for them. 68,000, yeah, have requested for some sort of relief. So there's three ways which a client can get relief for this hardship. The first and most ideal situation would be reducing the mortgage term. So say, for example, you bought your house 8 years ago, you were on a 30-year loan term, and now you're on a 22-year loan term, just reducing that right back out to a 30-year term. Because that way, obviously, you're still making a reduction on the principal, but at the same time, you actually, you're still reducing the principal. You're not deferring any of the interest and any of that nasty stuff that comes with having to do that. But it's not the end of the world.
So reducing the principal by increasing the mortgage term, right?
Yeah, increasing it. So taking it up to 30 years again. You've got it down to 22, back to 30 years. Obviously not ideal, but at the end of the lockdown or when your income returns to normal, you can bring that right back down to 22, and you've still managed to make some payments towards the principal during that time. So that's obviously the ideal situation. Some clients won't have that luxury and won't have as much cash flow available to do that. And then secondarily would suggest interest only. So say, for example, if one income's been lost or put on hold, one person's been made redundant, one person is no longer working for the time being, then just do that test and see if you can make that interest only repayment, removing the principal portion of the payment, and saying, hey, can we manage this on our cash budget just with interest only? That's the most important thing to figure out, because that's what we're telling our clients, is just cash flow. Don't get stressed out about the big picture. Just think now, what do you need to get through this time in terms of cash flow? What's going to make you guys get through this okay and feel really comfortable? And it's different for each scenario. So I'd say, just most of those ones, if one income's lost and you can still meet your payments interest only, that's the next option, interest only. And then I think the biggest one, number 3, the biggest one that you've seen in the news the most would be the mortgage holiday. Everyone's talking about that, and it's quite a topical product. And I think, obviously, going right back to the start of my career, just the term mortgage holiday is extremely misleading or gives off the wrong impression in terms of what the product actually is. Because it is a holiday from the repayments, but not from the interest. It's the correct term is actually a mortgage deferral. So, for example, if you have a mortgage of, say, 600K, and during the time of 6 months you take a mortgage holiday, during that 6 months, you don't pay anything, right? But all the interest that you would have paid gets accrued, it gets put together and then capitalized at the end of the loan. So you'd be paying something after 6 months, you'd be paying something like 600. Your mortgage would be 612,000 rather than 600K. So it's not a holiday. It's a very incorrect term. It's more of a deferral, and you will have to pay that later on. And so, for clients who have a bit of equity, it's not the biggest deal if they you lose both your incomes, or you lose one really important income. And you need that cash flow. Mortgage holiday is not the biggest deal, because you're going to add a bit more time to the mortgage, but look, you've got a good equity position, so it's fine. Or just the most important thing is just to get through the time period. So that's when I recommend the product, is when you look at the interest only payments and you say, look, I can't afford this. I actually need I actually need the mortgage holiday.
Yeah.
And then you'd say yes, because you can get that on a 3-month basis, and then you just get the 12-week holiday, and then in a perfect world, things are back to normal in 6 to 12 weeks, and then we're hunky dory, you beauty, just business as usual. But we'll have to see what happens. So it's that would be a recommendation if you're in a situation where we're telling clients, look, if you can't afford these repayments, even on interest only, and you're just feeling a lot of strain on your cash flow, and you don't want to start having to dig into the emergency fund or however you got your financial set up, then would suggest that product.